All right, there's the waveform. All right.
We're just going to continue to talk about China.
All right. Hey, folks, we're back on InformationInvestor.com with George Patton, daily, nightly operation with regard to business, intelligence, analysis, stock markets, global economies. George, what's going on?
Well, we're continuing our talk about China. One thing we want to talk a little bit about, since we covered last time, that in my opinion, the Chinese market is not going to go into recession. They have the opposite problem. They have the same problem we had in the 50s and 60s. That is rising prices, and consumer inflation is a serious concern over there. Now, the Asian Development Bank estimates that food prices have risen 10% across the region, but this is partly offset by wage increases, which in India are running about a 9 to 14% clip, and China pretty close to 10% as well. Now, affordability continues to plague youthful urbanites in the major cities like Shanghai and Peking. They're unable to find a place of their own because they can't afford it. Now, many of the highly educated workforce will instead opt to use disposable income on consumer non-durables and computers and online internet play. That's we like most of the online internet companies. Also, autos, travel, and lavish weddings will also denote the lifestyles of the nouveau middle class. Now, in the last 10 years, the average per capita income has increased by almost 150%. I wish we could say that over here, Robert.
Yes. Stateside, what do investors in the Asian markets want to do? What do they need to do? What must they do? What is imperative for them?
They must call or email us right away to get our latest intelligence on which companies are propitious to buy and when are the right times to buy them. Now, in China, for example, in the real estate cycle, we have a boom-bust situation, which has helped triple the number of millionaires in the last 4 years. They go up, they go down. They're a little bit less regulated than ours, of course. We went up for a long time and came down, as we know, like a rock sinking into the water. Now, any sustained price declines will be met by pent-up demand below the market, these young urbanites that we talked about before. However, the high-end Shanghai and Hong Kong markets, whose prices have surged 24% in 2010 after climbing 30% in 2009, will only marginally be affected by rate tightening. In fact, most commercial spaces rents are hovering at near record highs as European and American retailers vie for space to hawk their goods to Chinese tourists who are now traveling from the mainland to Hong Kong and Macau. Steve Wynn has expanded his operations over in Macau, and business over there is growing faster and producing more revenue for them than Las Vegas. Now, we also have Chinese investors in Vancouver and other Canadian cities bidding up real estate. The Chinese don't have a traditional savings plan or confidence in the banks, so real estate has always been a choice investment for them, and we don't see the types of dire scenarios of real estate crashes that have happened over here or that some people have been talking about for over a year. I think they're really talking about that to scare people because that will help their position, but we don't really try to employ that here. In manufacturing, the Chinese will tend to rely on technology transfer. Their solar power, however, is already taken over 80% of the Chinese domestic market, and soon they expect to be exporting solar equipment into Germany and taking over that market. Their focus on green technologies is what's going to be the wave of the future. Their use of rare earths is illustrative of this trend. Also, as the yuan becomes more readily acceptable in international transactions and gradually appreciates, the buildup of dollar-denominated assets in the central bank coffers will present less of a problem and reduce price pressures in dollar terms. Witnessed by the recent moves in China, they will continue to wield tight control on their precious industrial metals, insisting that the majority of manufactured goods be produced domestically. Now, Robert, of China's $3.4 trillion in reserves, that's a huge figure. What will they do with this? I mean, this is not really a capitalist country. It's a communist country at its base. And so these monies really represent sort of a community chest. We believe that they're going to be used domestically in price subsidies to combat rising prices internationally and to secure coveted resources for structural build-out, cement, coal, nickel, copper, as well as oil. These are all high on their list of securing resources around the world. Again, for China, the search for assets worldwide will continue. By the way, I'd like to mention at this time just saw that Kim Jong-un was in Mongolia. Did you know that in 2011, China is going to open the largest gold mine in the world?
That's amazing.
Isn't it though? They continue to find metals. They have a treasure trove over there. The only thing they don't have enough of is food. That brings us back to the point that the Chinese consumer, who's upgraded his diet, they now like more beef and more pork, and this is going to require more soybeans and corn to feed these animals, which are grown domestically. Which brings us back to our favorite companies, which if you call us or you send an email to us at
Wall Street at informationinvestor.com. Telephone number 646-470-8655. Give me and George a call. Invest some money in informationinvestor.com. We'll tell you how to invest wisely. And George is, indeed, a registered investment advisor with over 25 years of experience and successes on Wall Street. George, for investors who live in the Asia-Pacific region, what should they be doing with their money?
Well, they should be investing with us. We're going to say right now we'll give you one of our favorite picks just for a call or an email address.
That's fantastic. So, George, that's superb. There's actually an incentive for someone to just simply email us then.
Absolutely. You know, we believe in information sharing and believe in showing you that we believe in information sharing. Let me go back to a prescient piece I wrote almost a year ago, whether I asked the Chinese economy would simply, catch a cold or as the rest of the world went into recession or not. Currently, the growth is forecast to be over 9% this year. We believe, again, with that $3.4 trillion, I'm calling it a community chest, that the Chinese central planners will come in to support their market to Shanghai when it falls below 2,500 as the rest of the world seems poised for a major decline. Now, we talked about several months ago a possible summer of discontent around the world. And with the unfortunate Japanese earthquake, we feel that the expected lessened competition coming from Japan, Japanese second quarter GDP plunged by 3.7%. Chinese growth seems more likely now than ever before. So, yeah, call us, email us, and we'll give you a copy of our report on China and how it looms large in the world future. We believe Chinese growth is almost assured for decades to come.
Yes, we offer conscientious service, world-class services. George is the registered investment advisor. Your money's good with George. George, what do you think about this notion that some people have, that they have all the information that they need on China and the Asian markets when they're making investments? Do they have the same body, the same totality, the same amount of information that we have?
All I can do is answer to that question is talk about the U.S. Patent Office in 1900, and I believe the patent officer was probably talking tongue-in-cheek when he said that all of the major inventions had already been created or patented, that they should probably close down the patent office. So, no one ever, including this author, believes that you all have enough information. You're always searching for more. And speaking of more information, you were asking me about South Korea, Robert. Now, we've already talked about China, where the solar power manufacturers have taken over from U.S. implant companies and are now self-sustainable over there and looking to export. GM has announced just today that they're having a joint venture with LC to develop electric cars. Now, LC currently supplies the lithium-ion battery for the Chevy Volt, but now they're going to take a larger role in the electric car business, and hopefully they'll be able to export electric cars into China as well, or certainly LG will be able to open some factories in China. So not only do we have some information on China, we have some information on South Korea that is actionable intelligence. How's that sound? Isn't that great?
Yeah, that's perfect. That's wonderful. So if you're an investor, if you want to make money based on the knowledge that we have, that we've gathered, processed, analyzed.
If you want to stay ahead of the curve.
If you want to stay ahead of the curve, contact us. Send us email. Wallstreet at informationinvestor.com. George Patton at informationinvestor.com. R. Taylor at informationinvestor.com. Give us a call at 646-470-8655. We'll manage your portfolio for you.
Oh, and Robert, I just want to add one more piece I almost left out. We talked about the Chinese gold mines. Now, the Chinese, in aggregate, are now larger purchasers of gold bullion than the Indians, although India still leads in the purchase of jewelry. So anyone who thinks that the price of gold has topped in the last 2 days, a la 1980, and will not see past 1900 for, my goodness, years to come, I wholeheartedly disagree. As I forecast on Coast to Coast AM on May 15th, 2011, which is available on YouTube, my price for 2013 on gold was $21.50, and that was made when gold was at $1,500. I still confidently stick by that and believe that in the years to come, gold will continue to move higher as the reaction to fiat currencies and the printing of paper that is not backed by anything more substantial than the goodwill and promises of the nation printing the paper. And I think that's a subject for our next article about inflation, debt, and the debt bomb.
Information, intelligence that you will not find almost anywhere else. Tune in next time for our discussion, again with George Patton, on the subject of inflation and other global market shifts, events, trends, what have you. George?
Thanks, Robert.